In this episode of OG55, I got Mr. Seymour Duck. I got Slimer in the house with me today. We're talking all about that Disney quarterly earnings call. Fascinating call. A lot to talk about up next on OG55. Welcome aboard, everybody, to another episode of OG55. We have a fantastic show for you all today. Before we get into our topic at hand, though, I want to introduce my fantastic panel. We got Mr. Seymour Duck in the house with us today. Seymour, it's always fun having you on, sir. Thank you for joining us.
Yeah, thank you for having me, and I'm excited to nerd out with you guys.
Yeah, absolutely, absolutely. If you could let everybody at home know where they could find you on social media.
Yeah, you can find me on X at Mr. Seymour Duck.
And from what I understand, you hit, what was it, 700 followers on X?
I did. Fine. Well, the third time. For some reason, every time I hit 700, these subscribers, the followers just, like 50 of them just fall off.
Oh, it's probably because, they every now and then they kind of go through and they clean out, like, the bots or whatever. Yeah. I got a lot of my followers, too, are like those bots, and I try to swat them and block them as I see them, but sometimes you just can't. There's just so many. It's crazy.
And my goal is trying to get more followers than following. I have a lot of following now because I read a lot of the news, so I just scroll through X and just retweet or read it. But my goal is to have more followers than following. So at least I don't look bottish.
Yeah, no, I understand completely. We'll get you there. We got to get Seymour to 1,000 followers. So everybody, if you're not following Seymour on X, go ahead and do so. You won't regret it. He does a lot of Nintendo financial stuff. He does a lot of Disney stuff, obviously. So check him out on Twitter. Absolutely. And also, he's got great profile pics. I mean, look at this. It's amazing. Mario with the little duck and everything. It's awesome.
Oh, thank you.
Slimer, welcome back, brother.
Hey, thanks so much for having me back on, brother. How are you doing?
Very, very well. Thank you, sir. And if you let everybody at home know where they could find you on social media.
Yeah, so you guys can find me on X at SlimeSquare84. You can find me right here on Orange Grove 55.
There he is. And follow him on X. Make sure he is a huge Ghostbusters fan. Slimer, you post a lot of like Ghostbusters fan art, things like that. Awesome stuff. So if you're a big fan of that franchise, you will definitely like what Slimer has to offer. And he dives into, obviously, Disney and the park. So you get all of that in one. So
he's my go-to guy for Ghostbuster news.
Absolutely. There he is, Slimer. All right, so let's dive in. So I'm going to actually play a clip from CNBC. The Hugh Johnston, the CFO of the Walt Disney Company, fairly new to the job, actually. I think he just came on board, in January or something like that. He came from Pepsi. Great interview, actually, with CNBC. I've been critical of CNBC in the past, but this was actually a really, really fair interview and really interesting exchange. Before I bring up the video, though, Seymour, I want to ask you, and then I'll go to Slimer, overall thoughts, just kind of the overall, kind of the Cliff Notes version. What are your overall thoughts and feelings on this earnings call for Disney?
Just speaking on the numbers themselves, I thought they were pretty good.
Yeah.
The most important one was they finally got Disney Plus to be profitable. And I wasn't expecting that for another 2 quarters, but they got it in this quarter. And they're saying that ESPN will be profitable. ESPN Plus will be profitable on the next quarter. So I'm just like, okay, that's exceeding expectations. That's great. And everything else regarding the numbers, I already knew that was going to happen. Linear was going to go down. I knew that the movies were going to be down significantly because there was barely any movies in Q1, and the movies beforehand didn't do well. So everything, the streaming is what surprised me.
Yeah, it was ahead of schedule, and everyone talks you see all these narratives out there like Disney Plus is just this disaster, and it's it really isn't. Like you said, Seymour, they're showing profitability early. I mean, that's significant. That's really significant. What are your? Oh, go ahead, Seymour. I'm sorry.
I was gonna say, but the market didn't care.
Well, that's true. They really didn't, because the stock was down what was it, 9 or 10% today?
Yeah.
Mm-hmm. I mean, that's huge, and we'll get into the reasoning why. Because I mean, it's crazy because, like, you know, on paper, like you were saying, Seymour, the numbers are decent. They're actually pretty good. You know, there wasn't a whole lot of bad news with the numbers, but Wall Street did not like it. So I think it's a little bit of like what was happening around the numbers that was kind of freaking them out. But Slimer, and we'll dive into it. But Slimer, what are your overall thoughts? Your Cliff Notes kind of thoughts on the call today overall?
Yeah, pretty good. I mean, they missed revenue by a little bit, not too much, but year over year performance is better. Nothing surprising here. Entertainment was down, sports was up. The one thing that I said was going to happen was they were going to pay off and show profitability for Disney Plus. That did happen. However, once you factor in ESPN Plus, they're still in the negative 18 million. I suspect they'll probably be profitable on that before the end of the third quarter. So they're going to hit their target of Q4 profitability across the board on that, but nothing surprising. You know, the stock dump is the most surprising thing that happened today with this earnings call. And, you know, we'll talk about why that is. I think that Disney might have set the impression wrong that there was going to be some kind of a big announcement with this early earnings call. But some people say, hey, that, you know, sometimes early earning calls are just par for the course. So maybe that was just a bad interpretation on the market's end. Maybe Disney didn't do a good job of clearing that up. So let's dive into that and let's see what Hugh's got to say here, because he has a really good conversation with CNBC regarding this morning's call.
Yeah, no, absolutely. And I agree with you. I think that like switching the call from after the bell to before the bell, you know, Disney kind of gave off this impression like they had big news. You know, are they going to announce a successor to Bob Iger? Are they going to announce some big investor coming in like Warren Buffett? Or is there some sort of like big news, you know, because usually it's after the bell. So that change was kind of suspect. And a lot of people, a lot of investors were thinking like, well, something's going to be announced. This is kind of unusual. And it showed confidence on Disney's part to do it before the bell and all that. But nothing, absolutely nothing. And it's just like, it was kind of wild. And I think maybe that expectation game, you know, it didn't work in Disney's favor because they didn't announce anything and people thought they might have. And, you know, that could be part of it. But yeah, let's dive into this CNBC interview. Like I said, I've been critical of them in the past, especially, what was his name? Alex Sherman. I don't know, you know, but look, you know what? This is a very, very fair interview and it's interesting stuff. So gentlemen, if there's anything that you want me, like when we play this, it's only about 7 or 8 minutes, but if there's a spot in here that you want me to pause it and you want to say something, just let me know and I'll go ahead and do that.
Sure.
Disney just out with quarterly results, reporting earnings of $1.21 per share. It's better than the $1.10 expected. It beat pretty much on every estimate, but we should also mention that revenue saw a slight miss. Joining us right now, Hugh Johnston is with us, Disney's CFO. Hugh, good morning to you. Let's walk through the numbers for those investors out there trying to understand what's happening at the firm. As I mentioned, you did beat on every estimate on the profit end of things, but revenue, I should say, did miss, but just slightly.
Yeah, good morning, Andrew. Great to be with you guys. It was really another strong quarter for Disney. We feel terrific about it. Operating income grew 17%, EPS grew 30%, and as you noted earlier, was 11 cents ahead of Wall Street. Maybe most heartening of all was the improvement in direct-to-consumer streaming. Last year, that business lost about $600 million, and the entertainment portion actually made $47 million. That's a couple of quarters ahead of what we said. We said we'd get there in Q4. We got there in Q2. Overall, streaming was up 12%, which led entertainment to 5%.
There's one thing I wanted to say.
And then, of course, the experience.
Yeah, absolutely.
It took Netflix like over 10 years to become profitable, and it took like Disney 4 years. I just wanted to state that's tremendous for what Disney has done to become profitable within like the 4 years.
It's huge. It's a huge success story, and that's the thing too, Seymour, is that you see a lot of these narratives pushed online, where it's like they're kind of painting this picture that Disney Plus has been this absolute disaster, and when you really look at it, it hasn't. Not only are they profitable sooner than they were expecting, you know, a couple quarters sooner, but like you said, it took Netflix far longer to hit that profitability. So yeah, absolutely, this is a huge win for Disney.
Experiences business was terrific again. 10% revenue growth, 12% OI growth. overall good strength in the company, and we feel terrific about the momentum we have right now.
So let's break down some of this. The first piece is Bob Iger saying that you will be profitable on the streaming side by the end of the fourth quarter. Is that right?
That's still correct. Absolutely. We'll go down a little bit in Q3 based on some ICC cricket rights out of India, and then in Q4 we will be back to profitability, and we'll build on that in 25.
And what are you seeing in terms of just the strength of the consumer? Obviously, you look at the experiences business, for example, and it seems to be holding up. Are you seeing any distinction? Because we talked to a number of CEOs who talk about people trying to trade down. It's a little bit harder to trade down at one of your experiences, but I don't know. Are people buying less lunch? What are you seeing?
We don't see much of that. I understand what's going on broadly with the consumer, and certainly the consumer who's at the lower deciles of income, it appears to be making more choices around how they spend their money. We're not seeing a lot of that right now. We tend to play a little bit higher income, and as a result, we don't see a lot of trade down at this point. If anything, as consumers decide to consolidate their streaming services, we may be the beneficiaries to some degree of that.
Can we talk about sports? Because as you know, the NBA rights are in play. I don't know how much color you may,
can you pause?
Want to give
yeah,
us
absolutely.
On where
he was talking about Disney Hotstar and how the cricket rights, either he's going to lose that the next quarter, and that's why they're not going to be profitable. But then after that, they'll be profitable. You got to remember, though, that Disney had a deal with Reliance now, and Disney Hotstar is now going to be its own entity with Reliance. They sold that off.
That's a good point. That's a very good point.
So when you see a lot of that stuff, they spent a lot of money in content for India where the ARPU was really low, and that's going to be significantly decrease the cost because of that partnership with them. And then they're going to get the cricket rights because the people that the Reliance are the ones who own the cricket rights, the big ones. And so they don't have to pay as much money for those sports rights and for the Indian content. Disney was just going to make the content that they usually do, and then the other company would make those content, and it's going to help both of them out. And you'll see this in the next few quarters. In 2025, I think you'll see it dramatically where the cost is going to go down significantly because they don't have to worry about India anymore.
Yeah, and the other thing too is they're already projecting ARPU going up year over year. So you're going to have lower operating expenses. You're going to have higher operating income, which is just going to be great for them and great for entertainment.
And that's the one thing that a lot of these streamers that people don't talk about is that Netflix doesn't spend as much content in India. Spotify, YouTube, they don't spend as much content in India compared to Disney because they had that Disney Hotstar where it was specifically for them. When they bought Fox, they bought that controlling property, and they had to spend a significant amount, and they weren't getting a lot. A lot of these companies like Spotify and YouTube, they don't buy the content for them. They just get the subscribers, and they still get that low ARPU, so they don't have to sacrifice costs. Where Disney did, even Netflix, they don't spend as much as Disney did in India, and so that's why you see a lot of the ARPU. Total ARPU for all. That's why it's been decreased because of that. But then look at the earnings report. You see that now they cut it into like, oh, this is Disney plus domestic, international, and then Hotstar because they know that Hotstar is going to be the one with the lowest ARPU.
Yeah.
Well said. Well said.
Where those negotiations stand, but as you see sports going forward and the amount of money that you're going to have to spend on rights like the NBA, what kind of profit margin you can expect out of that group?
Yeah, I think, the sports business is a super strong business. ESPN has about a 35% market share of sports, obviously the biggest player in sports. And I expect we're going to continue to choose to get the rights that we need to make ESPN a strong performer. Where there are other things, we may choose to either carve off a little piece of a sports right, or we may give up certain things. As we look into the future, there may be things that are less relevant to the portfolio.
Now, it was announced today, too, if I'm not mistaken, that they're going to add a ESPN tile to Disney Plus, correct?
Right.
By the end of 2024.
By the end of 2024. And then, but we also have ESPN Plus as well. That's separate service.
Right. But I think eventually what's going to happen is I think the same thing they're going to do with Hulu, they're going to do with ESPN. I think they're going to run it separately for a little bit. And then eventually there's going to be a complete transition over. One of the big complaints that people have with ESPN Plus right now is the quality of the service. It's not very great. It's sluggish. It just doesn't have the same technology as Disney Plus. And so by putting on the Disney Plus service, I think you're going to offer a better package for customers. You'll be able to offer bundled price points. Plus, people are going to see what's also in Disney Plus, and it's going to have that, like Hugh Johnson said in another interview with Bloomberg, it has that stickiness to it once you see all the great content on there, which is going to lead to more new subs, and it's just going to be able to provide better retention. As you know, the streaming service has a lot of churn. But if you notice, before we move any further, their sports actually did pretty well this quarter, year over year. So what I think they probably did to adjust is they've taken their investments out of linear and they're putting into sports, which is smart.
Oh, absolutely. Absolutely.
In terms of the NBA, they've been a terrific partner. We're important to them. They're important to us. And we expect to continue to have a good relationship with them going into the future.
We're looking at some of the linear numbers and they do continue to come down. How far do you think they ultimately come down? Do you think that there's a plateau where they?
So one thing that's really important about the NBA here is that NBC is also looking to get an NBA exclusive right. Because like he said right here is, you're looking at 35% of all sports are NBA. So that's a pretty big market share. So this is going to be like Fox all over again, really, when it comes to who's going to get the exclusive rights. Obviously, they're not looking for ownership of the NBA. They're not looking to buy the league. However, they are looking to get exclusive streaming rights. And in the streaming wars, where now you're really narrowing it down to 2 or 3 big players, every exclusive deal is going to count a lot.
Yeah, so they're in a bidding war again with Comcast, huh? Just like the Fox thing.
Not yet, but now that this announcement is official that they won it after this earnings call, yeah, I think so. And the news broke recently that Comcast wants NBA. They actually started talking to them while Warner Brothers Discovery was talking to them to get exclusive rights. So I think that there's definitely going to be a lot of money on the table for NBA coming up here. Yeah,
absolutely. What do you think about that, Seymour?
I think Comcast just wants to buy it so they can kill the competition. Mm-hmm. Because if they can get the NBA rights from Warner Brothers Discovery, then that partnership that Disney's going to have with them, it's going to already be on rocky. It's going to be on a rocky path already because you need NBA.
Mm-hmm.
That's true. It's Disney, Fox, and WB, right?
Yeah. Right.
That we're going to do that joint venture. So what you're saying, Seymour, is that Comcast is smartly sort of like going in there and trying to get the NBA rights to sort of, splash some cold water on that a little bit.
Yeah, or even bid up the price so that they have to pay significantly, and then Warner Brothers in the end could not even afford it.
Fascinating. Yeah, well, we know that Brian Roberts plays like that because he did the same thing to Fox with Disney. So it might be that he might go back to that play.
They plateau out, or do you think it's just a long-term straight line down at this point?
No, I do believe you have to see some flattening at some point because people choose cable for reasons other than just the fact that they're going to pay a little bit more. It may be that their access to broadband. It may be they're not comfortable making the technology switch. There is a convenience factor there. So I do think at some point it starts to flatten out. We haven't seen that point yet, but I wouldn't be surprised if we see that in the next couple of years.
He makes a great point there, I think, with the linear. Go ahead, Slimer.
Yeah, no, he does make a really good point. The other problem with the internet is you're not going to get high-speed internet everywhere. You need high-speed internet to speed. I mean, you're looking at 25 megabits per second just to be able to stream on one device in 1080p or 4K. And believe it or not, there's actually a lot of regions within the United States and in Canada that don't even get that kind of data speed. You still have a lot of parts of the United States that still run on DSL, which is still about 5 Mbps. You can't stream on that.
Yeah, no, absolutely. And you have a lot of older people too that are they don't want to make the switch. Like my mom, she's a baby boomer And she, you know, she's got her phone and stuff, but like when it comes to like entertainment, like she prefers cable, you know, and a lot of people her age probably do. And he, you know, Hugh Johnson was sort of alluding to that, where like some people don't like to make that technology switch, probably a lot of older people. So I think he's right with this linear thing. There is definitely a bottom where there's gonna be that base of people that just don't want to change, you know?
Yeah, due to taste or infrastructure.
Absolutely.
I'm just trying to figure out streaming, Hugh. It'd be nice to be profitable, obviously. Andrew referred to it like as the holy grail for the fourth quarter. I mean, okay, so you break even, you're slightly profitable. Do you see 20% growth year after year at some point? Does it ever get past digital nickels that we traded for analog dollars? Does that happen?
Well, this is interesting. Before we hear Hugh Johnston, it's like, isn't Netflix extremely profitable? Like we're already seeing that it's possible to make money and sustain that on streaming. So it's a good question, but at the same time, like it's kind of an obvious one because we're seeing it right now with Netflix. So why couldn't Disney do the same thing? Am I off base here, Seymour?
No, Disney can simply do it. You know, with the interest rates going up, they can simply do it just with either increase the cost for ad rates or increase the cost for the premium tiers. And then soon they're going to do the password thing, I think next month, and or 2 months. But there was reports apparently that they already started in some accounts. But yeah, that's going to significantly increase the growth as well, because now you have to get another account. People can't share their passwords anymore. But yeah, Disney will be fine, because I think what Disney's plan is that now that it's profitable, they want that nice low profitability growth, nice and stable, and become that cash cow. So they can slowly increase the price, and they can slowly, you know, bring the content that everyone wants. It's good for Disney.
Yeah, absolutely.
And I think a really good indicator of that is the fact that their ARPU is actually going up, even though ad rev subscriptions are going up. So you have the lower subscription tier going up, but the ARPU is going up with the more premium subscriptions going down. So I think that's a really good.
And I just want to say, like, the ad tier, I've been testing it out. I had a year free for my cell phone provider, and then it ended, and it's like, oh, you need to renew. But then it's like, oh, you can get $1.99 for 3 months in Canada. And it's like, okay, I'll take it. But it's the ad tier version. So I tried it out, and I'm like, you know what? I'm not bothered by the ads. If there's an ad, I'm like, okay, fine. I'll go to the washroom. I'll go make a sandwich. It's like, this is just back like cable, where it's like, okay, you know, we get the commercials. Finally, I can do something instead of just pausing, right? But it's like, it doesn't bother me. And they make more money on the ads, even though it's cheaper.
Yeah, well, and it's interesting too. I think you're absolutely right, Seymour. And I'm an older guy. Like, I'm in my early 40s, and Slimer, I know you're around the same age as me too. And like, you know, for most of my life, I grew up with ads, like whether TV, you know what I'm saying, or cable. This is a normal part of life. Unless you're like this really, really young kid who kind of grew up in this internet age, which I'm not. I mean, I'm in the internet age now, but I didn't grow up with it. So for me, ads are like kind of like, I'm so conditioned for it anyway that it's like, okay, I can sit, like you, Seymour, I can sit through some ads, go to the bathroom, come back, make a sandwich, whatever, you know what I'm saying? Grab a beer, you know, so not a big deal. And
check your phone. Yeah. But you know what? Here's the other thing too, is Disney is really good at mitigating churn. This is something that they've built a skill in their experiences division. And if they bring it to the Disney Plus, and it looks like they have, they do have a really strong opportunity to be able to mitigate churn better than Netflix. And I'm not saying they have to compete with Netflix better, but they can manage churn better and keep the subscribers. That means less money they're going to have to spend in marketing and trying to recapture these customers that they're losing, which is just going to be better profitability for DTC.
Yeah, absolutely.
There's also one more thing I wanted to say. Also, Disney's working with Trade Desk and Google to improve their ad tech. Disney has a lot of data, not just in the parks, but also in the streaming. And then they just don't have, they need to improve that ad technology that they have. So they've been working with Trade Desk, and they're working with Google to ensure that, you know, the ads are going to the right people, and if it's working significantly and it's improving, then they can also increase the pricing on that, so that when they get the clients to come in and buy those ads, more money for them.
Interesting.
Which is one of the takes that Nelson Peltz wanted to do, even though Bob Iger said he was already going to do it.
Yeah, well, that was pretty typical of Peltz. He would just kind of like he pretty much would copy the Iger, like he would suggest things that they were already doing. You know, it was a common trend with him. It was kind of funny.
I think it does, Joe. It's a great question. Look, the overall entertainment business is a fundamentally healthy business, right? You basically see eyeballs moving from one channel to another channel, in effect, going from cable to digital.
Real quick on Hugh Johnston, I just want to say, like, this is kind of like a little. I'm going to digress a little bit here. There's kind of talks that he might become like maybe the next CEO. That he's on that short list. I gotta say, for a CFO, for the head accountant, basically of this massive company, he's got some charm to him. He's a likable dude. You know what I'm saying? He interviews very, very well. I got to know more about the guy to really say if I'd want him to be CEO. But he's likable. He's more likable than Chapek was, I think. You know, so yeah, I don't know.
Yeah, I agree with you absolutely. He definitely has like a hey, let's go play 18 holes of golf. Loser pays $1,000 and buys a beer kind of an attitude, doesn't he? Like he just rubs me that kind of way. He's very sociable,
Yeah.
He probably, you wouldn't think so because usually CFOs are like numbers, but yeah, I could see him taking the spot, I could see it not having the same effect as most CFOs you put in the spot where they just cut the company into pieces,
Yeah. Oh, absolutely. You never know with these guys because we had Tom Stagg's CFO for the longest time, and Bob Iger put him in charge of the parks. Mm-hmm. And a lot of fans were worried about that. They're like, "Oh, you're gonna get the CFO and have him run parks. That could be a disaster." He ran those parks really well. Everyone loves Tom Staggs, So just because he's the head bean counter, so to speak, the head accountant doesn't. I think fans should have an open mind with this guy because sometimes they turn out really well, like Tom Staggs. Go ahead, Seymour. I do apologize, brother.
Oh no, I just wanted to say he reminds me a lot like Tim Cook. Tim Cook was also the CFO for Apple before taking over Steve Jobs.
Really?
And yeah, so he was the number guy at Apple. And, people had issues with that at the beginning because they're like, well, he's the numbers guy. He's not creative. He's not like Steve Jobs. They can't focus. Yeah, he's the one that brought in like over, I think they're under now, but they were at one point $3 trillion company. And it was because of him, not Steve Jobs. He was the one that took all that idea that Steve Jobs had and made it work with the numbers. And, it's not a bad thing. And, if he was CEO, I wouldn't be opposed to it. Some people say they want creative, but, it worked with Tim Cook and nobody's complaining about that now. At first they did, but now it's like, okay, look at they just announced a new iPad now. Right. And then the new MacBooks, their chips, they're still innovating. And then they got the Vision Pro and then the iPhones, like, they're still doing really good, and they're very like ever since Tim Cook came, they went from like under 1 trillion to like over under 3 trillion, and they just bought $110 billion worth of stocks.
Oh, the buyback thing, yeah, that's crazy.
The biggest buyback ever in history for any company.
Yeah, that's crazy. And here's the thing too, a lot of Disney fans, they get into this thing like, oh, we need a creative running the company. You really don't need a creative. You probably shouldn't have a creative running the company because really what you need as a CEO is someone who respects creatives. Mm-hmm. It's someone who can lead and facilitate that creative environment. But you don't necessarily need a guy or gal in there that's a creative themselves. They just need to respect that creative community. And from what I understood with Chapek, he really didn't do that. He was sort of like, he would walk in the room and he would know it all. I heard he was very, very, like my way or the highway is what I'm hearing. And it could be wrong, but this is what I'm hearing from people that I've talked to, like within the company and things like that, where if you can have a CFO, you can have a money guy in there. And if he respects the creative process and leaves it up to the creatives, and it helps foster that environment, you're fine. you're absolutely fine. Like Bob Iger has done a really good job, I think. I think most people were very happy with Bob Iger prior to the pandemic. I wouldn't say Bob Iger is a creative guy, you know, but what Bob Iger understood was that you have to put the right people in the right positions and let those creative people do their job. And if a guy like Hugh Johnston, being a money guy, can kind of do that and just sort of have the creatives kind of let them run free and give them that creative freedom to kind of do their thing, I think he'll be fine. Absolutely.
Well, let me add to that real quick. The thing is Hugh Johnston already came in after the restructuring already happened. They already cut $7.5 billion in operational costs. So if you're afraid of a CFO coming in doing all that, that's already been done. This isn't like a Best Buy Corey Berry situation where she was a CFO, came in as a CEO, restructured the entire company, laid off a lot of people, downsized completely to pivot it more towards online and shrinking the retail end. So that's not this kind of situation. That's already been done. So all the things that someone would typically be scared of, if you're like a shareholder of the Disney company example, that's already happened.
Exactly.
So I really don't see why you would be scared of Hugh Johnston, especially if he's a facilitator of people, like you said, with good ideas, and he gets out of the way and lets managers manage and lets creatives create and lets leaders lead. So
yeah, well said. Well said. Absolutely.
Yeah, and like I said at the beginning, when they announced Hugh Johnston, he has a proven track record. He worked at Pepsi. Like, I was impressed that Disney was able to get Hugh Johnston. That I was impressed by Disney. If I was a shareholder, I would have been very happy that Disney actually did that. They would take the initiative to get someone that qualified and bring him to the Disney company.
Well, it was a huge win. And I was actually surprised by that too, Seymour. And I didn't even know this until he came over, but Pepsi's actually a bigger company than Disney.
Mm-hmm.
I mean, that's wild. I always knew Pepsi was huge, but bigger than Disney? I was not expecting that. So he's got the chops. Absolutely.
Obviously, there's margin implications initially, but as we scale over time, I think we ought to be able to equalize those margins out, or at least get them closer so it becomes less of a factor for us. So, yeah, I actually think that building that streaming business and making it into an important growth driver for the company is a really good idea because the margins are going to be there for us. Now, what do we have to do in order to do that? We need to deliver quality programming. We need terrific engagement, and obviously bundling helps a lot with that. We need to work on password sharing because that's actually a terrific growth driver for us. We need to get our distribution costs down, and we need to use technology so that we can market directly to consumers and also give them good recommendation engines. By virtue of doing that and ultimately building out an international business, I think it's going to be one of the great growth businesses for the Walt Disney Company.
Hugh, can you, though, speak to the balance between the streaming business and the linear business? It actually has come up in the context even of this debate over the rights for the NBA in terms of how important linear is going to be. There's talk that NBC, our parent company, is going to be one of the buyers potentially to take it away from Warner. We'll see whether that happens. But part of that calculus is that they would put more of those programs on linear, on network, at the same time that they might put some on streaming. So how are you going to be thinking about the balance between the programming and original programming, live sports, for example, that's going to go direct on streaming and only exclusively on streaming versus the linear piece?
Well, I mean, we've actually been quite successful, and I won't speak to Comcast strategy, but we've actually been quite successful putting things on ESPN and also on ABC, whether it's the NBA or the NFL. We did that a few times in the fall. I actually think there's a good balance. Part of the reason for that is you really have very different audiences between linear and the streaming businesses. The streaming business on average is about 20 years younger than the linear businesses. So I think you can actually reach more by leveraging both. I view them both as incredibly valuable assets for us in terms of reaching the most people that we possibly can.
How concerned are you about the competition in the context of some of the big tech companies and Netflix when it comes to live programming? Netflix, for example, was not engaged in live programming. Just recently, this past weekend, they produced the Tom Brady roast, which I think went viral and it has great success. They've got this big fight coming up this summer as well. Obviously, you're putting certain sports on streaming. Peacock is doing it too. Again, there's a larger question.
Can we pause on that?
Yeah, absolutely.
They said that Netflix was doing a fight. It's Jake Paul. That's not a fight.
The other thing too, Seymour, is that the only sports content they have right now is in agreement with WWE, which again, hey, look, no discredit to wrestlers. They hurt themselves doing what they do. It's a craft. I love watching wrestling. I'm not saying wrestling is not a sport, but that's not a sport. You know what I mean? Disney is heavily ingrained within the sports industry. So when it comes to who's going to bring sports content to their streaming service, Disney's got way better relationships with leagues, way more than Netflix. Netflix has a lot of work to do, a lot of catching up to do if they're going to get on Disney's level when it comes to bringing sports streaming to Disney Plus versus Netflix.
Yeah, no, well said. Well said.
From an economic perspective, their economics may be different than yours.
Yeah, I mean, we're always going to have to deal with competition coming at it from differential economics, right? Whether it's the differential economics of a linear or of a streaming only business, or someone who's in the technology business that has a broader set of economics to leverage. That said, I think the core strengths of our company, in particular the IP that we own and our position in sports, give us pretty good strengths as we're competing with those guys as well. So I would expect that we'll continue to see good, healthy competition in this industry for a long, long time.
Was the IP that they own a dig at Universal?
Oh, right. I know exactly that they own. Exactly. Yeah, that's the one thing. And we're going to talk about Nintendo today, quite a bit actually. But, that's the thing too with Nintendo and Comcast is that because I've been saying this a lot with Universal, right? Universal needs better in-house IP. And people will come at me and say, well, what about the Minions? And what about this? It's like, yeah, they have those properties that are successful. Minions is a very popular franchise, but Universal has very few mega franchises like Disney does, or even really Warner Brothers, And the problem with that not having those real huge franchises is that when you depend on these outside parties like a Nintendo, those companies like Nintendo can start asking for more money because they know you're backed into a corner. You got to do it, right, Seymour? If you want to elaborate on that.
Yep. Nintendo is doing great. They're the moneymaker for Universal right now with their parks. And at first they probably signed a deal. It's like, okay, here's something less because it's their first time doing parks. But now with Donkey Kong and then rumors of other attractions coming in, they're like, no. We know that this is the top attraction at your park. You're going to have to pay us more money if you want to keep us happy.
Yeah.
And you look at the other IPs they own, like DreamWorks, that attraction that we saw the other day that we talked about, like that was lackluster. I know it's for kids, but it's like that's their IP that they own, and they're not putting money into it to make it look good as like a Nintendo world.
Yeah, and that's been an issue I've been saying for a long time, Seymour, that's Universal's MO a little bit with stuff. And it's not look, I mean, there's going to be exceptions to everything because I know Universal fans will get in the comments, what about this thing? What about that thing? But for the most part, Universal really does well with their theme parks when they got that quality checker behind them, watching them, like a J.K. Rowling or a Nintendo. But when they have their own IP, though, the quality is sort of iffy. It's sort of hit and miss, like you saw it with DreamWorks Land, even with that new Minions Land they got over there in the studio park and stuff. It's real hit and miss. So, no, you're absolutely right with that, Seymour. Absolutely. Slimer, go ahead.
Can I add on that?
Yeah.
So that's so true. And, the other thing that Nintendo brings to the table for Universal is their merchandising experience. They are, they're masters of merchandising their own brand. Have been for a very long time. The synergy that they created between the video games and the merchandise is just like, it's like so good. It's textbook. You showed the power band that you had on the other day, right?
Yeah.
Nintendo had their hands in that. There's no way that Universal alone would have came up with something that fleshed out and created. And then if you go to the stores over there, everything's very handpicked by Nintendo. They know exactly what their fans want. And there's a complete distinction, like you said, between Nintendo having their hands in merchandising versus Universal doing the merchandising themselves. Because I can tell you that sometimes you go look at their like actual IP merchandise, and you're just like, what the hell is this shit? Their shirts for Halloween Horror Nights this year are orange. And if you go on to Twitter and look at like the HHN posts about the Halloween Horror Nights shirts, everybody doesn't like them. I mean, there's some people that do like them, but it's very hit and miss. When it comes to their own IP, but like you said, if they have a J.K. Rowling and Nintendo behind them, they tighten up a little bit, and
you know what I'm saying? Exactly.
And for a short tease, we would be talking about Nintendo and the merchandising soon.
We will be, absolutely. Now, we're going to pivot right now to parks. Now, because we're pivoting, what I want to say right now is sort of a transitionary thing. I've seen a lot of this on Twitter, and it's not just today. I've seen it for years now, pretty much, since the pandemic, I think, where park fans are saying, Disney is Disney's wasting their money on the streaming stuff and the studio stuff when they should be, where that money should be focusing more on the parks, right? Here's the issue, and I understand parks fans want more park stuff, and we are getting more park stuff. We're getting $60 billion over the next 10 years, that whole thing. We are getting more investment. But this is what I think park fans need to realize. Disney is not a amusement park company. They are a studio first, and they happen to own theme parks. They happen to own cruise lines. It's a delineation that a lot of fans don't understand that. Like, it's not a theme park company first. It's always been a studio first. Actually, I do have a clip here real quick. If park fans don't believe me, then here's Roy Disney on it.
The real heartbeat of this company was, is, and will always be the film business.
It's the film business. Was, is, and will always be the film business.
Bringing in the receipts.
Right, bringing the receipts with Roy Disney, right, the nephew. But here's the thing: it's like the film business is what creates the IP, and that goes out to everything else within the company, right? So they make the movies, they make the TV shows, all that content, and then that fuels the theme parks. You know what I'm saying? And that's been the way they've been doing it forever. So this is the thing that people have to realize when they think that like Disney's wasting money on Disney Plus. They're not wasting money. This is the future. This is a studio. They need to invest in the studio and in that content. Without that, Disney dies on the vine, in my opinion. But Seymour, I'll start with you, and then I'll go down to Slimer. What are your thoughts on that?
I mean, when you look and compare with Universal, today I found out, I don't know if the numbers are true, but it was estimated that Epic Universe is only worth $3 to $5 billion in costs. And then when I was thinking about that, I'm like, okay, that's $60 billion that Disney is doing. It's very significant then, and that's still not enough. And I'm like, you got to remember that the parks are doing really, really well right now, and they added the $60 billion. And then you're saying that we shouldn't be doing streaming, but then what happens if there will be a time when the parks don't do well and you need to rely on the other parts of the business? You didn't put your money in that, and then now you're screwed.
Right. No, exactly, Seymour. And that was a position and this is why I don't understand. Do the park fans not remember just 3 or 4 years ago during the pandemic? Like, literally, that's what happened. Like, the world shut down, and the park, if it wasn't for Disney Plus, the parks, I mean, the company would have been way worse off because everything else was shut down. So that's the beauty of this stuff, is that when one element or one division fails or falters because of a situation, you got these other elements to kind of pick up the pieces and kind of raise it up. And it goes both ways, like the theme parks will bolster the studio will bolster the theme parks when they need it. It's a symbiotic relationship. But to just put all your eggs in that theme park basket, well, what happens if you have another shutdown then? Then what happens? And now you have a studio division that's limping along or dying because you haven't invested in it. And now your theme parks are shut down. Then what do? Then you're in a huge, massive mess. It's horrible strategy to just sit there and just funnel everything into the theme parks, in my opinion. But go ahead, Slimer. I do apologize here.
No, you're good, and you made a really good point. And let's not forget that they just recently invested from 2013 to 2023 $30 billion in the parks. So it's not like the parks haven't gotten an injection of capex. Over the last, and that's why the Disney parks are actually thriving. Whereas if you listen to the last quarterly earning for Comcast, their parks report was not that great. So Disney parks doing well, Universal parks not so much. And we actually have a graph showing right here. This is the page from quarter 1 2023 to quarter 1 2023. Okay, so year over year KPI for the parks for Disney and Universal. And this is due to the fact that Universal has not been spending, has not been injecting capital into their existing parks. They've been relying on the same attractions, given 1 or 2 over the last 10 years.
Yeah, no, absolutely. This is from Sean Nyberg. He says here, Disney reported a huge increase in their parks division the last quarter. Disney plus 10% revenue and plus 12% operating income, compared to Universal's theme parks, which saw only saw a plus 1.5% in revenue and actually saw a decrease 3.9% in operating income. Now, here's the thing too, because Bob Iger, I think it was Bob Iger today, said, well, it might have been, was it Bob Iger or Hugh Johnston who made the comment about the parks being soft for the next year? Was that Iger? You guys?
Either one of them. I can't remember.
Yeah. It was one of them. I do apologize. In the comments, please, if you know, let us know in the comments. But Disney did say today that the parks are expected to be a little soft going into the next year, right? And immediately, all I saw was a bunch of fans saying, "Well, it's because of Genie Plus. It's because of this. It's because of that. Something Disney did." Do we know that? Because this is what CBC Travel says. I think he makes a great point here. He says, this says a lot right here. I do not mean a Disney versus Universal thing, but as a barometer of where the market is. If Disney's prediction of a soft market is because of their own actions and pricing and not reflective of where theme park destination travel is overall, who is doing it better to show otherwise? So the point he's making here is Disney's saying it's going to be soft going forward. We're already seeing a softening with Universal. So is it really Disney's like doing that? That's why the outcome is soft here, or is it maybe an overall broader market issue? What are your thoughts on this this kind of a suggestion here, Seymour?
I remember back when we did it earnings for Disney, and I was comparing Disney Florida with Comcast. And I was talking about how there was a run-up after COVID for people to go to Florida, and then the trend went down with attendance. And I was saying it's an industry issue. Inflation has gone up, and the revenge vacation buying, is dying down. Florida was the first one to open up with COVID after the lockdowns. And a lot of a lot of international people, even including myself, Canada, a lot of the stuff was closed. But if I went to the airport and passed the test and go to Florida, take the mask off, I'm good to go. But then if I come back to Canada, they're like, "Oh, you need to be 2 weeks in a hotel, and then we're gonna have to get a test. We're gonna have to do this." The restrictions were crazy in Canada just to go back. But if I wanted to go to Florida, easy. And a lot of people did that. And then it trickled down to now it's going down because of that. People are not going as much because they can go to Japan now, go to Shanghai. Hong Kong, Shanghai was closed down for a very long time. And in California too. And I think you're going to see that in California trickle down as well with that because of COVID. I said that. And a lot of people on X are saying, no, that's not happening. But it is. You see that with Universal as well. You see that with the inflation rates and increasing costs. Like some of this stuff is happening because, it's an industry issue.
Yeah, it is. It's an industry issue, and it's not always. I think our friend Jay Shear said it today on Twitter as well, where it's easy to sort of do the scapegoat thing and just sort of like, oh, Bob Iger. And there are some people out there that their hatred for Bob Iger is stronger than their love for Disney. You know what I'm saying? And it's like, I understand you don't have to like Iger, or you don't even have to like, current Disney, but you still have to look at things from a fair perspective, I think, and put things in perspective, and not everything is sort of just, just because Disney has maybe a softer outlook or maybe, something bad happening doesn't always necessarily mean, oh, well, they're the reason why that thing is happening. You know what I'm saying? So this softer outlook could be external. It probably is. Universal seeing some softening as well. So I just found that to be pretty interesting. But go ahead. Go ahead, Slimer.
Say one thing, OG.
Yeah.
All right. So here's the other thing too. I think a lot of people are just saying a lot of these things just out of envy. They're looking at all these new attractions coming over to the OLC owned parks, and they're saying, man, why aren't we getting that in the domestic parks? Like, we should be getting that over here, not over there. But look at the numbers, right? I mean, from on April 1, 2023, international revenue for experiences, parks and experiences, from April 1, 2023 to March 30 of this year has gone up 29%. And then when you're talking about operating income, it's gone up 87% from April 1st, 2023 to March 30, 2024. from a purely business perspective, those are the numbers you want, whether their attractions are here or whether they're, they're in China.
Right. Yeah, exactly. Exactly. 100%. You know what I'm saying? So, yeah, it's absolutely wild. It's absolutely wild. Now, what do you guys think about, now, Seymour, you mentioned this to me, to us pre-show, that this earnings call felt a little short and it was a little bit more guarded. If you want to elaborate on that, we kind of dive into that. I think that was interesting that you pointed that out.
I think it's part of the reason. I don't think it's the full reason why the stock went down like almost 10%. But it felt like they didn't answer a lot of the questions. It felt like Bob Iger was the 2003 Bob Iger. He didn't have his balls back. He gave it away to someone. I don't know what happened with them, but they just felt protective and didn't say anything and didn't feel energetic. If it gave me 2003 Disney, I wanted the Q1, the shareholder Disney Bob Iger. That's the one I want. The one that was fighting Nelson Peltz and giving everything he got. And this earnings call, I didn't get that. And it felt like something was missing because everything was going so quickly. And then they were not answering a lot of questions. And it's like, what's going on here? And the stock market doesn't like uncertainty. And I think the biggest issue is that they want to know about the CEO. And the longer you delay that, the more uncertain the company is going to be. And I know they have to take their time, but in the short term, the stock market will vote on that.
Yeah, no, I know. And he didn't really give us much confidence in the CEO thing. He sort of gave a boilerplate, sort of generic, like, yeah, the committee that we have here for the succession, they're he said something to the effect of like, yeah, I think they're going to pick the right person or they'll make the right decision. And it was a very generic kind of vague comment. And it was like, okay, you're not really giving, like you were saying, Seymour, you're not exuding that confidence. Like, are we any further in this process? Is there anything else you can kind of give us where we can kind of like hang our hat on it? You're right, Seymour. It's a delicate balance here because you don't want to rush into this and have an issue where you pick the wrong person because you're just rushing to do it, right? At the same time, though, you don't want to let this drag out for too long either. Like it's real delicate here. You don't want to rush into it and have another Bob Chapek problem. At the same time, though, you don't want Iger having to extend his contract over and over and over again either. That's not good. So that they got to get on this.
Yeah.
Yeah. Go ahead. I'm sorry, brother.
I was just gonna say, and if you look at Starbucks, they bring the same guy back like almost 3 times. Like the Bob Iger of Starbucks, and because every new CEO they bring back keeps failing, and they're on X, I've seen some of the shareholders, they're scared that that's what's going to happen with Disney. They're scared if they don't get who that person is, the uncertainty will drop. The stock market will vote on it, and the share price will drop because they don't want that. They want the confidence, right? They want to know who it is, but they're scared that it might be another Starbucks CEO, a Bob Chapek 2.0, 3.0, because it can happen. You can get 3 Bob Chapeks in a row.
Oh, absolutely.
Yeah.
Absolutely. No, you can. You can mess up on this again. There's no rule against that. You can mess up as many times, and that could happen. Like you said, Seymour, it's happening with Starbucks in real time. Yeah. So they got to be real careful. They got to pick the right person. And that's why we've been saying on this channel a long time, they really should look into either a dual co-CEO thing or even bringing back the president position, because then it doesn't hinge so much on one person. Because then you have like that kind of like, okay, if you have Dana Walden and you have like Tom Staggs, they work together. It's not all on one person. And if one of them don't work out, it's less of a detriment to the company as if it's only one person there and they don't work out. You know what I'm saying? So you have those 2 people to do it. So we'll see. What do you think, Slimer? You think,
one thing. I just wanted to say, I recommend watching on CNBC on YouTube the Starbucks interview with the CEO and Jim Cramer. Because if you want to see what it looks like to see Bob Chapek 3.0 failing the company and can't answer the questions, and it looks like he's sweating, that's the video you would watch. And that can happen with Disney. It can happen. You can have a Bob Chapek 2.0, and then if that fails, you don't want that.
Yeah. And now, is that CNBC interview? Is that today or when was that?
Oh
interview?
no, it was last week. Starbucks had it, and its stock went down like 15%. It was brutal. Jim Cramer was going ham on him, and he couldn't answer any of the questions. Like, why isn't anyone buying your coffee? Well, they will come, but why aren't they coming? Increasing pricing is not going to make a difference, right? You have that pricing power, but now you don't. And he couldn't answer the questions. He didn't know what to do. It was very flustered for the CEO, and he was Bob Chapek. And I don't know what's going to happen the next quarter, but man, it was brutal. And people lost confidence in Starbucks.
Starbucks has relied on robust customer base for so long, and they don't think their customers will ever get fragile on pricing. And I think that's just been such a go-to answer for so long. They can just continue to raise prices forever. And yeah, we'll just raise the prices, no big deal. Customers just buy coffee.
Yeah, no,
but they're not doing it. Why? Yeah. But when it comes to this, brother, I think market speculation, a lot of people hung their hat on an announcement today, and it didn't happen. And that's partially Disney's fault, partially the market's fault for wanting some certainty when it comes to the announcement of a CEO. But Disney's got to do better with their PR, man. Because, I mean, even Twitter was speculating that it was going to be some kind of a big announcement, not just to shareholders.
Yeah. Oh, no, absolutely. And Jay Shear, Jay Shear, he's been saying this for a long time with PR is Disney's biggest problem right now. And I would agree with him. I mean, this is kind of another issue like that, right? You make this move that kind of implies or even heavily implies, when you move the call to before the bell, before the market opens, when you never did that before, you give the impression there's a reason for that. Like, are they going to announce something big? And like you said, Slimer, like the investment community, the fan community, everyone was speculating, like, what are they going to announce? Why are they doing it before the market opens? It must be something very positive. It was a move of it felt like a very confident kind of move, and then they don't do it. And, and it reminds me a lot of the park stuff. You have the same stuff going on with the parks where they set you up for this big thing. And then Josh gets on stage and it's a bunch of nothing. And it's it's an ongoing issue at Disney with this PR. And it's they constantly shoot themselves in the foot with that. I think if they didn't do that move with the early morning call today, and they did it as usual at the end, I think the stock, maybe it wouldn't have gone up. I mean, there's no really saying one way or the other, but I think I think the impact would have been far less than it was today if they didn't make that move. The expectations were just way too high. So yeah,
they hit all the KPIs they wanted to, missed revenue by a little bit, and they showed profitability on Disney Plus. I think it would have went up at least 10%.
I mean, it should have. I mean, it was a good quarter. I mean, it wasn't terrible by any means, It wasn't perfect. And Johnston is saying that, they got work to do. Absolutely. Absolutely. They got to get their content in order, I'm saying. And he even talked about that, I think, Geiger today, with they're going to pull back on the Marvel stuff, right? Which was funny. He said they're going to do 3 Marvel movies a year now or something like that?
Yeah, right? Yeah. Seymour, wasn't it
three Marvel movies a year and 2 Disney Plus series.
Mm-hmm.
It's interesting. I think that's still a lot, but
Same.
But we'll see. But I don't know, man. It's very, very interesting. But the craziest stuff about this earnings call is the market's reaction. It was just, and we'll see. We'll see if it bounces back tomorrow. I mean, I think it will. Maybe not tomorrow necessarily, but I mean, I think this is a temporary dip. I don't think it's going to linger too long in the low 100s. But we'll see. You just never really know. But should we dip into a little bit of Nintendo, Seymour?
Oh, yes.
Okay, let me bring up some of these tweets. We'll kind of go through these because I think this is fascinating. Okay, so this is from Mr. Seymour Duck. Let me go ahead and pull this up real quick, and I'll let you set the table. Go ahead, brother.
Oh, yeah. If you can do, yeah. So we will make it really simple here. If you look at Nintendo, the Nintendo Switch has been since it's been announced, 9 years long. And they're still growing. The IP is phenomenal. Your net sales are still. Let me explain first. Japan likes to do things different, and they don't like to do quarter by quarter, showing the examples. They like to do it accumulative, so they like to do 1 quarter and then 2 quarters, 3 quarters, and now it's the end of the year, so they like to do the full year difference. And you look at this, and you see sales 4.4% up. You see net profit up 13.4%. People are still buying games on the Switch and buying the console, even though it's 9 years since it's been announced. That's
can I just interject real quick? All right, so yeah, so everybody knows the average shelf life for video game systems like 7 to 8 years. So this thing's already 1 to 2 years past the shelf life, and it's still showing sub growth or growth.
That's wild.
It's wild. Well, it's the power of the Nintendo IP. Nintendo has the best IP. Like, they are the Disney of the game world, right? Because you have Mario, you got Donkey Kong, you got all these amazing characters and these IP that people fell in love with for over 40 some odd years or something like that. That's why. It's a powerhouse. It absolutely is a powerhouse.
Yeah,
so.
And it's not declining for year. You think because people were scared that Nintendo was going to decline after COVID because they got a significant growth bump during COVID because of the the lockdowns. And people were buying Animal Crossing and then Nintendo Switches like bonkers, and they were sold out. And then the factories couldn't make it because of the lockdowns. It was crazy, and yet they're still making money, and it's crazy. But now, when you look at the sales, though, like when you look at it deep down with the actual numbers, the video games only increased 1.5% year over year. What increased was, if you look at mobile and IP related income, 81.6% up year over year. So, and primarily that's coming from theme parks and the movie.
Interesting.
And that's kind of scary for Disney because they're competing and they're getting this growth. That's great for Nintendo, and like 81.6%. And then you look at the other includes merchandise up 98.5%.
Yeah. Consumer products for Disney World is nowhere near that, which means that Nintendo does consumer products very, very, very well. If you look at the merchandising numbers that we were talking about at GMs, and we can share that later, OG. We can put in a link or something like that. But Seymour actually shared it with us. He was like, "Hey, check out the merchandising numbers in billings." And out of the top 10, I think 3 or 4 properties were Nintendo. They know how to sell shit. You know what I mean?
Yeah.
And when it comes to most profitable movie, Super Mario was the most profitable movie in 2023. Avatar, because technically Avatar was released in December 16th of 2022. But I mean, if you would have counted it as a 2023, probably would have been the most profitable. But technically, it came out in 2022. So yeah, Nintendo was the most profitable movie last year.
Well, it's wild, and it's interesting. I want to ask you, Seymour, because you're really knowledgeable on this stuff, and I'm kind of curious because in the theme park space, we just had an amazing drop actually from Tokyo Disney. They showed all this footage of like their new Fantasy Springs area, which is incredible. I mean, absolutely incredible. But OLC, Oriental Land Company, who runs the Tokyo Disney Resort, they do a phenomenal job for the most part. Not perfect, but they do a really good job. Most park fans, they're like the gold standard in a lot of fans' eyes, right? They're also a Japanese company, right? Then you look at Nintendo, Japanese company. They're absolutely crushing it. They know how to foster this IP and really be successful. Is there something with the Japanese business culture that is sort of facilitating some of the success?
It's just Japanese are built different.
Yeah,
pretty much. The culture, like they strive for perfection, and then if they fail, like they take it with honor, and they'll fix the mistake if there was a mistake given. They don't care about the short-term gain; they care about the long-term horizon. So you see that with a company like Nintendo, where the ex-CEO, took a 50% pay cut instead of laying off any of the employees.
Was that Reggie, by the way?
Oh, no, this is the Japanese.
Japanese. I'm sorry.
Yeah. The president of the of Nintendo, he took a 50% pay cut, and then all the other executives took a pay cut as well, because he understood that if he laid off employees, the morale would be down, and then the quality of it would be down, and then it's like, you don't want that within a company of Nintendo. So this, like, they understand that, it's not about making money in the short term. It's in the long term, and they sacrifice their own money so that everyone is happy. And that's the Japanese way. The corporate governance is really strong, and that's kind of why I shifted from U.S. companies to Japanese companies, because of that. Because you hear news with Elon Musk laying off everyone in their company now. I hear 10% and then another 10%. And they're saying, oh, yeah, we still need to vote for him to get his $50 billion back. Why? When he could have given that $50 billion to the employees that got laid off and hire even more employees. But apparently nobody cares. He's already rich. Why do you need another $50 billion? Because he deserved it. But what about the employees that got laid off? They didn't deserve their jobs. That type of like mentality, I don't care for anymore. I don't like it. I used to be an investor for Tesla. I used to be an investor for a lot of U.S. companies, but because of that, I don't like it anymore. And when you look at companies like Nintendo, right? They care about the consumers. They care about the employees. And you can see that in the quality of work they do and the money they come in with it. People care for it.
Yeah. Well, no, you're absolutely right. When you have, like you said, when you take into account, okay, if we lay people off, that's going to impact the people that are still with us and their morale. And when you're mad and upset and you got a chip on your shoulder as an employee, that's going to come into your work, right? It's kind of like the old, like, like Italian grandmothers will tell you, don't cook mad because it shows up in your food or whatever, right? Mm-hmm. Same sort of thing, and Nintendo understands that. Obviously, Elon Musk doesn't. And Elon, I mean, I'm not an expert on Tesla. I don't follow it that much. I know you follow it way more, Seymour. But from what I understand, just from the little bit that I do see on like X and stuff, I mean, he is not doing so great with that company right now. I mean, it is. Go ahead.
I was just going to say, I don't hate Tesla. All right. I just don't like the way that's being run right now. And a lot of people, it's going to hate me for saying that because they think Elon is God and any disrespect to him is wrong. But I like the technology. I like the cars. I like what they're doing, innovating the future, but I don't like how the company's being run. And I, as an opinion, I can say that. And you can also say that you like Elon. That's okay. But that's why I put my money where my mouth is and invested in a company like Nintendo because of that. Yeah. But yeah, you can even look at the sales. So like Super Mario Wonder, it's the fastest growing Mario game to date with like 1.3 million. Like that's impressive.
Yeah, no, it is. It's very impressive. It's wild. Now there was some big news today from Nintendo. Well, here we'll start with this first, and then we'll go into. Go ahead.
I just wanted to say, look at these sales numbers for the hardware now, because we're talking about this. 141.32 million units. That's pretty impressive. It's about to be the top selling hardware. It's about to beat, I think it's DS, and then it's the PlayStation 2. If I'm not mistaken, or was the PlayStation 3? I got to double check on that. But it's one of those. And I think it was the PlayStation 2 because when you bought the PlayStation 2, you got in the free DVD player in the side. But yeah, that's significant. And then they took like 1.24 billion of software. Like that's incredible. This is like Disney numbers when Endgame came out. Like this is impressive.
Yeah, exactly.
The IP is so strong. But the one thing I wanted to note is that they expect sales to slow down in the new fiscal year, and that's because of this new announcement. It's
in the next tweet, I believe. Let me pull that up. There we go.
If you want to read that,
yeah, I'll read it. I'll read it. So this is oh man, I hope I pronounced his name right. Furukawa, president of Nintendo. We will make an announcement about the successor of Nintendo Switch within this fiscal year. It will have been over 9 years since we announced the existence of Nintendo Switch back in March 2015. That's crazy. We will be holding a Nintendo Direct this June regarding the Nintendo Switch software lineup for the latter half of 2024. But please be aware, there will be no mention of the Nintendo Switch successor during that presentation. So they are going to eventually announce that the successor to the Switch. That's interesting.
And what's even more interesting is that in June they're announcing we're going to have an event for games, even though we just told you there's going to be a new system. I think Nintendo is very confident in this. Yeah. And the rumor though is that the June event's going to have an anniversary special for Zelda, and you're going to get a special copy. Like the Super Mario one, where you had Super Mario 64, Super Mario Sunshine, and then Super Mario Galaxy. There's rumors that's what they're going to do, and that's the transition period, and that the last hurrah for Nintendo to get the Switch users to buy, and then it'll come the new console next year.
Now, is there any word, and this is just, we probably don't know yet, but I'm just kind of curious, just kind of a nerdy question. okay, so we had initially we had the NES, right? The Nintendo Entertainment System, right? The 8-bit thing, and then the one to follow that up was the Super Nintendo, right? Do we have any idea as to what this next console is going to be for the, to succeed the Switch? Are they going to do like the Super Switch, or is it going to be like something totally new name, everything? Do we know what direction they might go in? Any hints of that?
There was like a person on X saying that during the earnings call, but they don't do it live, right? So you have to actually go to Japan and get invited to go. He said that the CEO, the president of Nintendo, was saying that the new hardware is called the next Switch hardware. So they're making it seem like it's going to be a step up, but you're not going to alienate the previous users. And I think it's going to be very smart on that. We were talking about it in the pre-show about this. Like that's the number one thing they had an issue with from the Wii to the Wii U. They alienated the previous users, and people didn't want to switch. Ironically, switch to the Wii U. But now they have the significant. They had the same issue back in Nintendo as NES to the Super Nintendo. I was listening to a documentary the other day, and the biggest issue was that they own 95% of the video game market when they owned the Super Nintendo, the original Nintendo Entertainment System of the around the world, 95%. But because of Sega, they had to decrease the cost of the Super Nintendo because Sega was selling it as a loss for Sega Genesis, and they couldn't include the backwards compatibility for the Nintendo system, the original one, and they lost all those customers. And I think they learned from that mistake, from that, and then from the Wii to the Wii U, and I think that's going to happen here. You don't want to lose it because, man, they as you can see, 9 years since they announced it, all those sales. If you announce a new console without backwards compatibility and anything like that, and you start fresh, yeah, they're going to go somewhere else. And you don't want to do that.
So what you're saying with backwards compatibility is the new console will support the old console's games?
Yes.
Okay.
But they've been working with a company called DNA. They have a significant investment with them, and they've been working on where the primary hub would be the Nintendo Online, and that's where it's going to be like the Apple ID. And I believe their focus now is that they're going to take and I think part of it's Value Act as well, coming in and telling them, look, you made your mistakes, and this is how you fix them. And they learn it from Value Act has a track record with Microsoft, and so now they're telling Nintendo, like, this is what you should be doing. And I think that's what's going to happen. They're going to be like Apple, where you're going to have those upgrades, not every year, but every few years, and you're going to have the same software you had before, one store, but then you have your hardware, and you're not going to alienate the past users, and that's what you need. I think it's great.
Well said. Slimer, what are your thoughts on this, brother?
No, hey, he's a subject matter expert on this. I just have some ideas here and there, but I think taking playbooks out of Apple's playbook is a really good idea. Going with like a Switch Pro, if you will. You upgrade the screen technology, upgrade the GPU, put in a little bit of better CPU, and renders the old games better. And 9 times out of 10, that's all people really want. This thing is supposedly going to have PS5 level graphics. Now, as far as like the nuances and how it does frame rate and refreshing and aliasing and things like that, I don't know the details on that, but going from the current Switch to PS5 level graphics is a pretty big jump, especially for a portable unit. But I think that this also goes to show you that portable units are the way to the future. Nintendo's going to be the first one to tap into that, which is going to give them I don't think anybody's ever going to try to catch up, to be honest with you. The other thing too is now with AI making big strides, software is only getting, or hardware is only going to get cheaper because eventually you're not going to even need advanced hardware to render these graphics. It's all just going to be AI generated by video game programmers. So these things are just going to get more cost effective and thinner. Pretty soon you'll have a Nintendo Switch that's like, I don't know, like the size, like the thinness of your phone, but they can produce graphics as good as Avatar.
And that's
probably 15 years.
it was rumored that they're going to use AI in the Switch 2 with DLSS, and the performance just on a chip level. It's apparently, these are all rumors and speculations, but from what I read, it's going to be like a PS4 level performance on the chip level, but then when you use the AI, it can surpass PS5. And I mean, like, if you use AI and I can't tell the difference and it doesn't ruin the experience, I'm all for it.
Yeah, absolutely. Now, our last and final Nintendo topic is this museum. I didn't even know this was happening, Seymour. This is crazy.
Oh yeah, they're doing a museum. This is a very Japanese thing to do. There's museums all over Japan. If you ever go to Japan, I recommend going to even though I haven't been there, I've seen videos, Cup of Noodles museum, where you can make your own custom noodles. And they make it fresh, and they even package it as if you bought it at the store, and you can design it as well. But yeah, I think this is what's going to be like that. It's going to be like one of those museums, the Toyota Museum, but for Nintendo. And because of this, I don't think I want to go to Epic Universe anymore. I want to go to Japan. I want to go to Japan, so go to the Cup of Noodles Museum, the Toyota Museum, Nintendo Museum, and then I go to, Tokyo Disneyland and also Universal. I'm like, I'm getting all those, right? So it's like,
right. Well, you even said to Seymour that the only reason you'd go to Epic Universe is for the Mario stuff, right?
Yeah.
And the Donkey Kong. So, but they have all that in Japan, and they have Japan,
and Japan, and the yen for Japan right now has been like dropping significantly. So if you wanted to go on vacation, Japan would be cheap right now. Plane tickets, maybe not but I mean, if you go get one of those capsule hotels, and then you're good to go. Yeah, and you can drink alcohol in the streets.
Oh, really? That's interesting.
Well, we can drink alcohol down in the streets here in where I live in Florida. So take that. But yeah, flights to Japan from LAX right now are not bad. I was actually pricing them out earlier, and it was like under $1,000. It was under $900.
Wow,
not bad.
Yeah,
not bad at all. Not bad at all. Now, I do want to say real quick before we go, one thing that I'll never forget from Nintendo. I will never, ever forget this. A new game, right? You get a new game as a kid. You open that box up, that smell of the instruction manual and stuff.
Yeah.
It had that Nintendo smell. I'll never forget it. It's like, it was so iconic. So iconic.
Do you remember how proud you were of yourself when you actually figured out how to open up the seal on a CD case without having to, like peel it off in bits? You know what I mean? Like, remember when you fucked it up? You're like, ah, shit.
Yeah.
Like you're in the car parking lot and you're like trying to peel that seal off for like the next 10 minutes. And then you crack the plastic and then you're pissed off for the rest of the day.
Yeah. And then when you get it all in one strip, it's like so satisfying.
Yeah. You're just like, oh, reach over, pat yourself on the back. Awesome.
There we go. But gentlemen, always a good time talking shop.
Oh, there was just one more comment I wanted to say.
Sure.
But it's relating to Nintendo and Disney, and it's Nintendo is like taking notes.
Plastic seals.
Plastic seal.
But yeah, I just wanted to say, like, Nintendo is taking notes from Disney, and like you said, Disney, they're like a media company first, and then theme parks. That's what Nintendo is doing. They're a video game company first, and now they're doing theme parks and movies.
Right.
So they're branching out and diversing like Disney. They even have a new division. They bought a company, and now they have Nintendo Pictures. They're branching out. They're diversing, and it's good news. It means increased competition for companies like Disney, which is good because that means they just have to do better, and then we all win.
Yeah, no, well said. Yeah, Nintendo's a smart company, and there's one thing that Nintendo and Disney both have in common, and that's value act. So that's interesting too, very, very interesting. But both of these companies are iconic, legendary companies, and such a massive part of our culture. You know what I'm saying? Both of these.
Yeah, staples of pop culture, and who knows? One of these days, Nintendo might have its own animation studio.
You never know. Well, they have that Nintendo. Was it Nintendo Pictures?
Yeah, technically they do. They technically do. They can make CGIs and everything right now, but they the only thing they had was like these Pikmin videos on YouTube. That's the only thing they have made.
So okay, so I want to ask you this before we go, Seymour. Why did they? Okay, so they have. This has been on my mind. I don't think we've ever talked about this. They have Universal Picture. I mean, Nintendo Pictures, right? I remember hearing that announcement. It was really cool. It was the animation thing, but then they went with Universal for Mario. Was that because the Nintendo Picture thing wasn't like up and ready for that kind of thing, or?
Well, it didn't happen until after the fact, and even then, I don't think they want to do anything that big. They don't have the. It's a small company that does CGI work. It's nothing big, but they can learn from this experience that maybe from 10 years from now they can make their own movies like Super Mario Brothers. But there's a video, I forget by who, but they were talking about Chris Melanandri and Miyamoto and how they came about and how Chris Melanandri also failed Illumination, and then also Nintendo failed, Miyamoto failed Nintendo when doing the live action, and they shared that bond, and they understood each other, and they had a relationship doing with Universal because Illumination, and then Nintendo with the partnership of the new parks, and they created this this partnership, and he's on the board now too, which is very significant because you don't usually have American, even non-Japanese board members on a Japanese company. So, and yeah, if you could find that video, I recommend watching it. But yeah, it's a significant story. And then now you have this relationship. Nintendo doesn't like breaking off relationships. They might stab you in the back once or twice, but they don't like. But before the relationship starts, once the relationship is there, they don't like doing it, breaking it off. They like to keep it. So, like the Zelda movie, that relationship was probably already in the making before even the Universal movies coming out with Illumination. So yeah, you can see all that in the pieces coming out. But yeah, I'm excited. Super Mario Brothers 2 is going to come out in 2026, and then you have the Zelda movie, live action, and the director or the producer, I forget which one, said that he's going to make the best movie he can. He's going to go balls to the walls for the fans. And I'm excited.
That's awesome. No, absolutely. And Zelda is a property that, if done right, you could have like a Game of Thrones level kind of saga. You know what I'm saying? You can do so much with that. I mean, that's going to be huge. That's going to be huge. I'm really looking forward to that too. I love Zelda. I absolutely love. I used to play those games religiously when I was a kid. You know what I'm saying? I mean, that was so good. The one on Super Nintendo was my favorite.
So. There was like rumors that they were going to spend like Avatar level money for that movie. And I'm all down for that. If you're going to make a spectacular movie that's visually appealing, like Avatar, but Zelda, I mean, if this is going to be your first movie, do it. For the first, like Zelda, I'm down for it.
Oh, absolutely. No, you have to, because this could be a franchise builder for them. Like, I mean, obviously Zelda's already a franchise, but I mean, in the movie space, you do this right, you hit all the right notes with the Zelda movie, you can go so far with this. And there's so much potential there.
The one thing that I'm afraid of with the Zelda movie is they have too many Easter eggs. Like, like whenever you get the treasure chest and you open it, that theme song. Yeah, I would be so embarrassed if they actually put like an Easter egg of that in the movie. I mean, like, I think it's funny at the same time, but if they're going for like a quality Zelda movie, they can't put any Easter eggs in there like that.
No,
maybe like a little 2-second one that like the hardcore fans get, but that can have a lot of pitfalls to Easter eggs, I feel like, if not done right.
Yeah, it would have to be, if they were going to do something like that, it would have to be like weaved into the score, where like you can pick it up, but it's not like obvious.
Yeah.
Or it's not like da 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 da, but you can maybe if it's like subtly in the background, like in the score, okay, that might work. But if it comes out there just blazing, that's
I don't know. I'm sure it's not going to be cheesy like that. No.
Yeah. Yeah, I would agree with you. I think it's gonna be a more serious take on this, which would be really cool. I think
Plus Miyamoto is in charge, so nothing's gonna go wrong with him in charge. At least he understands the mistake he made with the live action, because the live action he didn't have control. He's like, Hollywood, hey, take my movie and do what you want, and that was a huge mistake. That was a disaster.
Well, it's funny because Nintendo helped Illumination make the one Illumination animated film I actually liked. Like, I've made no bones about it. I've not been shy. I do not like Illumination animation, really. I mean, you know, it's just the Minion stuff. I find most of those films, like that Illumination does, I find them to be pretty obnoxious for the most part. But Mario, a very good movie. A lot of heart between the two brothers. I thought it was really cool. It was really, it played into the franchise perfectly. I don't know. I loved it. I'm looking forward to the sequel as well. I think it's been great.
I agree with you. I don't like Illumination as much either. Mario is the only movie I like from them. Illumination reminds me of Pixar, but without the immersive storytelling. You take that away.
Right, exactly.
And I thought, sorry, I was just going to say, and I thought it was perfect because with Mario, you get that immersive experience, not that immersive storytelling as much. So you get that nice quality, experience of playing a game, but you take that to the big screen.
Well said. Well said. Gentlemen, it was a fun time today talking Disney earnings, talking Nintendo. Amazing time. I'll start with you, Seymour Duck. If you can remind everybody where they can find you on social media, sir.
Oh, yeah. You can find me on X at Mr. Seymour Duck.
There he is. And Slimer, where can they find you on social media?
OG, pleasure having me on talking the earnings calls with you guys. Seymour, I really enjoyed talking with you guys tonight. If you guys can jump on X, find me on Slime Square 84, and I'll post Orange Grove stuff. I post Ghostbuster stuff. We talk Nintendo on there, so come check us out.
Absolutely, absolutely. And thank you all so much for watching this episode of OG 55. What are your thoughts on the Disney earnings call? What are your thoughts on the theme park division, the streaming service, the studio, ESPN Sports, Nintendo, the smell of the Nintendo games when you first open them? What do you think about that? I mean, amazing stuff. Amazing stuff. Comment down below. We would love to hear from you. And thank you all so much for watching.
세상은 누구에게나 공평하게 추악해.